Now, the first thing we want to talk about is the SEC versus Ripple case. We have been kind of joking about this for some time, saying how this is coming any day. We've been waiting for this legal ruling to arrive. And last Friday, I believe it was Thursday or Friday of last week, it came in. We got the landmark legal ruling, which was largely, not entirely, but largely in favor of Ripple. And it really dealt a huge blow to the SEC's attempts to regulate the cryptocurrency space. So the ruling came out, and you may recall that back in December of 2020, the Securities and Exchange Commission, the SEC, which provides oversight, for Wall Street and for the entire investment landscape, for the most part, for securities specifically. The CFTC, for example, oversees the commodities, markets, and the SEC oversees, the equity markets. And there's been a big debate about whether the SEC is responsible or not for regulating crypto. Who's supposed to regulate crypto? Well, we can blame the SEC. We can blame, anybody we want to. But quite frankly, this is really kind of a dropping of the ball by Congress, because Congress really empowers the agencies that oversee, various asset classes. And the Congress has just really, while many other countries around the world have already created regulations that are transparent and simple, they've already created tax laws that make it very clear for the investor how to operate with crypto. Here in the United States, as we warned you many years ago, they went to war with the cryptocurrency industry. They were going to have a big war. And the Congress really dragged its feet on this. They really didn't release any kind of guidance. They didn't create a new entity or an agency to oversee this burgeoning digital asset landscape. And so the SEC took it upon itself to say, well, if this cryptocurrency industry is rising and no one is going to regulate it, we'll regulate it. Okay, well, the SEC has really stepped in it because they picked on one of the most liquid and most powerful crypto projects on earth, and that is Ripple. You may recall Chris Larson, who was one of the founders of Ripple, at one point during one of the very big rallies in Ripple many years ago, Chris Larson, for a very brief moment, became the richest man in the world. Very briefly, while Ripple was up, to some very, very high price. That, of course, has changed because Ripple's price has fallen. But my point is that Ripple is very well positioned and has spent on the order of about $200 million defending itself from the SEC. Other cryptocurrency, projects, especially some of the cryptocurrency exchanges, buckled whenever the SEC came knocking. Kraken, for example, just went ahead and just buckled and paid a fine. But Ripple said, no, we're going to fight this to the very end. And the SEC's aim was to prove that XRP, which is the token issued by Ripple Labs, was a security, requiring the SEC to oversee it. And the lawsuit basically led to many crypto exchanges just dumping XRP and saying, we can't sell this until we know what the SEC ruling or what this ruling is going to be by the court. Well, as I mentioned, that ruling came in late last week, and it was a huge blow to the SEC because the district judge who was overseeing it, Judge Analisa Torres, largely agreed with Ripple Labs that the sales of XRP did not violate investor protection laws. Basically, the way that the court ruling read was that XRP is a security when institutional investors buy the token, when they're buying it directly from Ripple Labs, especially at the very beginning of the whole project. Venture capital and institutional investors, these financial institutions, when they bought XRP, they had all of the knowledge. So therefore, in that case, the old Howey test, which is like an 80-year-old test that is used to determine whether something is a security. Basically, the judge says, well, it does meet that criteria. So if Ripple Labs is selling XRP, its token, to institutional investors who are very savvy and sophisticated, yes, it would be a security. However, that still has to be litigated. We got a summary judgment here. But the second part, which is very good for Ripple and for investors in crypto and especially for crypto exchanges, was the fact that the judge found that XRP is not a security when individuals buy the token. And the reason is because in the ruling is that the average retail investor doesn't have access to the information that the institutions do. And therefore, many of them and most of them didn't know that they were buying XRP from Ripple Labs. They were instead buying it from Coinbase, or they were buying it from Kraken, or they were buying it from Binance. And so this was a huge blow to the SEC because it's in its attempts to make many of these cryptocurrencies securities. Now we see that there is precedent that has been set that shows that a cryptocurrency that is being sold on an exchange, when it's in the secondary market like that, it's not really being viewed as a security. Well, this is how the SEC itself has talked about these cryptocurrencies in the past. And that's why part of the reason why Ripple Labs won was because one of the former chiefs of the SEC, known as Mr. Hinham, had some documents where he said Ethereum is not a security, and even Gary Gensler himself is on record saying that many of these things are not security. So the SEC really ramped up a war, and it kind of blew up in their face. Now Ripple Labs may still face some financial penalties over its early institutional sales, but the court has made it very clear that XRP is not a security when purchased by individual investors through cryptocurrency exchanges. Again, we think that is very good news for the crypto investor. We think it's good news for the burgeoning cryptocurrency industry. But, again, we desperately need clear and transparent regulations. So this is not a solution. This is just a judge saying something, but it really sets a precedent. And now the Congress just simply needs to act. So now, if you were paying attention to XRP last week, you saw what happened to the price of XRP. So it was trading, below 50 cents right before the ruling. And when the ruling came out, it shot up, almost 100% at one point. It was, overall about 75%. It's since backed off a little bit from its highs. But this was obviously a very big ruling. And now immediately Kraken and Coinbase relisted XRP, fully confident now that XRP is not a security when sold to the retail investor through a crypto exchange. Therefore, it does not need SEC oversight, and the SEC overplayed its hand. Okay, so we are bullish on XRP. We own it for the long term. We think that it is a good solution for cross-border payments. It's not my favorite cryptocurrency of all. Obviously, it's just a small portion of my overall portfolio, but nonetheless, we are pleased with this outcome, and I'm really in basic agreement with the entire ruling. But we do believe that the Congress needs to step in. As we mentioned before, as we've been telling you, the Congress or the courts could shoot down the SEC, and now we have evidence that the courts have shot down the SEC. They are not the end-all, be-all. They are not the ones who make all the rules. Right now, it's very unclear, as proven by this court case. So good news for Ripple, good news for XRP investors, and we believe there will be potentially now more rulings similar to this because of the precedent that's set. This doesn't bode well for the SEC's future lawsuits or current lawsuits that are waiting to be, that are pending. This doesn't bode well for the SEC, and they know it. So they are going to have to go back to the drawing board and figure out how they're going to do it. On one hand, you could demonize the SEC and say, well, they're just bad people. That's not the case. The SEC, you can question their motives or whatever. I don't see them as some sort of, demonic, institution who's trying to destroy everything. I think that's terrible. I think the right way to see this is that everybody's confused as to who's supposed to be regulating this. And we all believe that cryptocurrency needs to be regulated. But the SEC, without any kind of congressional direction, is just going to do what it's going to do. And so the Congress has to act. And their laziness in this effort, we predicted, because they don't want to have to deal with this. It's not in their best interest. It's in their best interest to ignore it and hope it goes away. But that's what they think is in their best interest, but it turns out that it's not. Okay. Now, Jim asked a great question. He says, why can't the SEC get fined when they lose? And that's a very good point. So many of these companies have been paying fines through the nose, and that's a great question.